once you understand some of the technicalities with Bitcoin and the lack of risk associated with it, all of a sudden, in comparison to what's over here in the traditional finance system, on a risk-adjusted basis, Bitcoin looks like a far better option than what's over there.
Peter Dunworth is a partner at the Bitcoin Advisor and a thought leader in the Bitcoin community. He has a keen understanding of the shifting economic landscape from pre-2020 to today, and emphasizes how investing has become significantly more challenging. However, once you grasp the fundamentals of Bitcoin, it simplifies the investing landscape tremendously. In a world where all other asset classes are highly overleveraged and over-financialized, Bitcoin stands out as a pristine bearer asset. Peter emphasizes how people generally see risk and volatility as synonymous, but these things are not the same. The true risk lies not in Bitcoin, but in the existing financial system with its trusted intermediaries and inherent counterparty risks. By holding Bitcoin in self-custody, you eliminate the risks and tap into the benefits of the revolutionary asset. Peter advocates for every individual to own Bitcoin, predicting a global demand for it, and a price I will not even say. But before we do that, I want to introduce our sponsors, Stampseed, the Orange Pill app, and Swan. Our partners are businesses and people that we respect, and our products that we at Bit Intelligence personally use. You're watching 21 Voices.
I don't think we're in a position of strength when it comes to the economy right now. I think there are a lot of risks that a lot of people are glossing over, thinking that everything's going to be fine. But, if I look at investing where we are right now relative to where we were, say, 5 years ago, now is a far trickier time to be investing than 5 years ago. If you take a step back, we didn't have a debt problem 5 years ago. Well, we did, but we thought it was a big one, but now we've got a bigger one. We didn't have an interest rate problem where rates are at 5%, but, back then they were close to zero. We had strong economies, commodities were booming, low inflation, good GDP, and relatively low employment. And I look at this, I think, where we are today, we've got interest rates are up circa 5% on where they were 5 years ago. Debt is up probably 100% on where it was 5 years ago. We've increased the money supply dramatically. Inflation's substantially higher than where we were years ago. They say unemployment is really strong, but they've changed the way they calculate unemployment to give us the pretense of, or the belief that it's strong, but I don't believe the numbers because they've redefined what unemployment is. We were meant to have a recession by now, but they redefined what a recession was to avoid having a recession. But just because you change the name of something or the parameters as to what describes it doesn't mean you avoid it. So in my head, I'm thinking, we've had a recession. We've had 2 negative quarters of GDP. Investing today is probably far more difficult and complicated than where it was, say, 5 years ago. But at the same time, when you understand Bitcoin, that simplifies the investing landscape dramatically and gives you an option to compare and contrast to what otherwise would be quite depressing options. We have been over-indebted in the stock market, over-indebted in the bond market. We're also over-indebted in the property market. So we're highly leveraged across all of the asset classes. And here we have a counterweight to that in Bitcoin, which is a digital bearer asset. There is no debt encumbered on Bitcoin. And so I literally look at this and I think, well, we've over-financialized property, we've over-financialized stocks, we've got all types of securitization that's packaged up financial products to chop and change and mix and match these things so that we can recombine and on-sell these bastardized products. And then we have this pristine collateral asset over here in Bitcoin that is not privy to any of the financial chicanery going on over here. When you put those two together, it becomes very clear to me. Once you understand some of the technicalities with Bitcoin and the lack of risk associated with it, all of a sudden, in comparison to what's over here in the traditional finance system, on a risk-adjusted basis, Bitcoin looks like a far better option than what's over there. For people looking at this from an investment perspective new to Bitcoin, one of the key things to understand is that risk does not equal volatility. And if you understand risk, you'll realize that the risk is in the existing financial system that we're working with, not so much Bitcoin. And the The really funny thing to think about is that all the volatility revolves around Bitcoin, and that is less volatile relative to Bitcoin. But the risks are associated there, and this is where people conflate those two terms. And that's the thing most people don't understand, is that you don't have any counterparty risk when you hold Bitcoin. And that's why, to me, holding your own Bitcoin, having it off exchange, not having an ETF, the most pure form of Bitcoin is to buy and hold it in self-custody. When you buy and hold it in self-custody, you don't have any counterparty risk. And this is what the entire legacy financial system is built on, is counterparty risk, because you're relying on third parties for what you have. And this is probably one of the most difficult things to get around. And, people new to Bitcoin say, oh, but, there's no CEO, or there's no one behind Bitcoin, or there's no government, backing of it. And to me, that's the feature, not the bug. I know there's a demand for every human on Earth for Bitcoin at some point in time. They might not know it yet, but there will be demand for, the world to have Bitcoin, and everyone will have that requirement. Then you layer on top of that every corporation, every government, every charity, every church, every religious group. There's going to be desires are infinite, but the supply is capped at 21 million. So, and if we think that, there's going to be a lot of coins that never see the light of day again, I'd probably put that number at close to 10 million. A lot in cold storage. There's only 1.8 million on exchange right now. I'm not sure what that number equates to, but there's very few coins available for what's coming down the road. I think it's an infinitely better asset than gold. So let's just say it's 10 times better than gold, dollar-wise. 15 trillion market cap should be 150 trillion market cap held in Bitcoin v gold. You look at the monetary premium that extends to mean of exchange. There's 100 trillion in money per se globally. I think Bitcoin's a better money than money that exists presently. It's just not widely acknowledged as that or accepted. And to be fair, why would you want to use Bitcoin if that's going up 10 times every 4 years versus holding your cash? There's no way anyone would take that trade. And the final thing, and this is to me the biggest part, is that Bitcoin being a firm unit of account means that we know exactly what we've got. And this is where, when you benchmark to Bitcoin, it's a much more rigid system and finite system to benchmark to, rather than US dollars. Because when you're benchmarking to US dollars, you don't know how much US dollar is in the system. They can create US dollars overnight through the expansion of the credit system, and you will never know what percentage of that monetary network you own. Whereas Bitcoin, you'll know exactly the percentage of the monetary network you own, because you can verify that yourself. And that, to me, is just the tip of the iceberg when it comes to how can Bitcoin hold more value than what's in the world, because you need to understand that there's a monetary premium attached to Bitcoin. Not only can it do the store of value, mean of exchange, and unit of account, when you have those three functions of money competing for space on the Bitcoin blockchain, that's where the magic happens, and that's where you get the monetary premium. And there is a premium given to you for optionality. And the interesting thing about this is that Bitcoin doesn't only give you optionality now, but it gives you optionality through the entirety of time into the future. And this is something that people really can't comprehend and grasp, to think, well, how can 99% of the world's wealth be held in Bitcoin, v 1% in stocks, bonds, property, and everything? Won't all the Bitcoin just go and buy everything that's in the world? It's like, well, that's if they want the world to end today, yes, but everyone holding Bitcoin for the future knows that the world's going to be better into the future, so we better preserve this asset so that we can buy something better into the future. And this is what allows for that ability to have 99% of the world's wealth held in Bitcoin v everything else.
Please bear with us for a quick message from our sponsors. These videos take a lot of time to make, and we've partnered with brands we trust like Stampseed and the Orange Pill app in order to get the funding we need to bring you these videos every week. Don't store your Bitcoin in cold storage without stamping your seed phrase on an indestructible titanium plate. Stampseed is fireproof, rust-proof, impact-proof, and easy to hide. It has no loose parts and will give you ultimate peace of mind that your Bitcoin is safe and sound for the long term. Click the link in the description below for 15% off your stamping kit. When I finally got Bitcoin, it hit me like a lightning bolt. It was the currency of the future, the only money that truly mattered. But there was a problem. I didn't know anyone else that thought like me. That is until I discovered the Orange Pill app. Suddenly, I was connected with a network of like-minded Bitcoin enthusiasts, right in my own city. The Orange Pill app is more than just a social network. It's a community of passionate individuals determined to change the world, one Satoshi at a time. This series is brought to you by Swan and created by Bit Intelligence. Remember to like this video and subscribe to both our channels for more videos like this every week. Thanks for watching.
I think the direction is certain. The timing is unknown. I believe that's what will happen. Let's take an example of some very wealthy people and see what they do with their money, and then try and ascribe that to what would happen if they were holding Bitcoin. Let's look at Jeff Bezos. He's been in that business for 30 years. He's held that stock for 30 years. He's probably one of 5 people on earth who never sold until recently. Let's just go to the prior history of him selling in the last 5 years, but he's held for 25 years. Well, why did he hold that? He knew that that was the best performing asset in the world for him, but only he had access to the initial launch of that business. And what we have here in Bitcoin is everyone on earth has the ability to invest in Amazon back in 1997 or whenever it first launched. And everyone has the ability to learn as much about Bitcoin as Jeff Bezos knows about Amazon. 2 very different things. That future certainty of knowing what's coming is critical in being able to hold that for the long term. And this is where I look at Bezos's transition through that. There were times he could have sold down. He knew that it was going to dip. He had a long-term time frame. So what did he do? He leveraged his stock to maintain it. What did that do? He never had to sell. He never had to pay capital gains tax on selling. He still created liquidity, and he went out and bought whatever he needed on the back of that leverage that he took out with the margin loan. So he never had to sell. I look at this and think, well, Bitcoin's 1,000 times better than Amazon. It'll probably end up being 1,000 times bigger by market cap easily, because it gives not one person, being Bezos, that option. It gives 8 billion people that option. And this is where, for me, if 8 billion people had that option to put off consumption today because they know they're going to be able to consume more tomorrow, people will do that. It's the ultimate savings tool. And that's probably the most misunderstood thing out there. People think it's a correlated asset to the tech stocks, and it looks like that. And they think it's risky relative to that because you don't have an earnings stream, you can't check out the sales, you can't check out the underlying debt, you don't know what the management team's doing, and there is the feature, not the bug, once you understand the ecosystem. To me, that de-risks the weighting from a relative risk perspective with Bitcoin versus your tech stocks.
Peter reminds us that our current fiat currency system lacks transparency for proper benchmarking. No one knows exactly how much currency is in circulation, leading to a game of pricing and spending. Bitcoin, as a finite, verifiable asset, offers a clear way to price goods and services over time. This long-term certainty allows individuals to save effectively, transforming Bitcoin into the pristine asset that people want to protect and hold for many generations. When people can trust that saving today means more purchasing power tomorrow, they will inevitably choose to defer their consumption. This certainty de-risks Bitcoin compared to tech stocks and other so-called risk assets that the media often associates it with. It's only a matter of time before a large majority of the world is clued into this phenomena, and thus lies the opportunity. Stay tuned and remember to subscribe for the latest recaps, insights, and films about all things Bitcoin. This is 21 Voices. If you want to watch another episode, try this one here.